What's up, Banter fam? Welcome back to the show. In today's video, I'm going to be running you guys through what I believe is the best DEX in cryptocurrency. These days, with heavy US regulatory scrutiny, which is impacting the centralized exchange market, I think the need for DEXs is now stronger than ever. And I think if you don't know how to use a DEX, now is the perfect time to get your hands dirty and start learning how to use decentralized exchanges. And I believe our partner, 𝗖𝗵𝗲 is the best crypto order book DEX on the market for a variety of reasons. And in today's show, I'm going to be running you guys through what makes 𝗖𝗵𝗲 different, show you how to open a trade on the platform, as well as running you guys through the trade to earn program, which allows you to actually earn money as you trade. So before we get into how to actually trade on the platform, the first thing I wanted to do is point out a couple key differences on 𝗖𝗵𝗲. Now, there's two major differences between 𝗖𝗵𝗲 and other DEXs. The first thing is that it's powered by Starkware's Layer 2 scalability engine, StarkX. This allows you to trade with multi-chain support, low fees, deep liquidity, and maximum security. Being powered by StarkX makes the platform very fast to use when it comes to opening trades, setting orders, just navigating through the platform, as well as the actual transaction process on your MetaMask wallet. It's a breeze compared to using other exchanges, and this is one of the major draw cards, I think, for the 𝗖𝗵𝗲 DEX. It's just how quick and easy it is to use. And then, of course, being built on StarkX means you can get those fees right down when you are processing transactions. And interestingly, the Cancun upgrade for Ethereum is coming soon, which is set to reduce the fees on L2s by an order of magnitude. So DEXs like 𝗖𝗵𝗲 are going to become a lot cheaper post Cancun. They're already quite cheap, but we're going to see them continuously get cheaper and cheaper. So we may actually end up seeing DEXs very soon become much cheaper than their centralized counterparts, which historically have been a lot cheaper, but now we're seeing that gap start to close, especially with the introduction of more networks. 𝗖𝗵𝗲 is listed across Polygon, Arbitrum, and BSC. Probably the cheapest of which to transact on is the Arbitrum and the BSC network, but there's also many other networks now starting to launch. You've got ZK Sync, you've got Starknet, etc., and I'm sure potentially you'll be able to trade on those in the future. So the Layer 2 space is looking quite promising from that perspective, and utilizing StarkX's technology allows 𝗖𝗵𝗲 to offer transactions with very quick finality, but also relatively low fees. And then the second major draw card is the fact that it's an order book. So I want to make the key distinguishment here between two types of DEXs. The first type of DEX that you're probably used to are your Oracle-based DEXs, like your Gains Network and your GMXs. And then you've got your order book DEXs like DYDX and 𝗖𝗵𝗲, which essentially act like centralized exchanges, as you have buyers on one side and sellers on one side, and they essentially have order books, meaning when you place a transaction, you're placing it against another player in the market. There actually is also a third type of DEX called an AMM, an automated market maker. This is something like a Curve or a Uniswap, where they use liquidity pools in order to facilitate transactions, but that solution is primarily used for spot trading. The most common leverage trading solutions are, of course, Oracle-based and order book solutions. Now, there are a few distinct advantages that order books do give you over their Oracle-based counterparts. One is that you can maintain maximum security because you're having price discovery happen on chain. There's no Oracle-based risk involved because all the price discovery is happening natively on the DEX. This over time makes the DEX more scalable. The downside is that it's harder to spin up new pairs. So as of today, trading pairs on an app like 𝗖𝗵𝗲 have been relatively limited, but they have continuously added more pairs over time. Now we actually see over 14 pairs on 𝗖𝗵𝗲, whereas they first launched with only a few, and they're progressively launching new pairs. So they launched the Arbitrum pair, they recently launched the DOGE pair, so they're pretty on top of it when it comes to launching new markets. It is slightly slower to launch a new market than it is based on an Oracle, but it means when they launch, they'll have native liquidity on their order book, which is obviously a massive plus, and also it offers a trading experience like you're probably used to on a centralized exchange like ByBit. And interestingly, 𝗖𝗵𝗲 is actually ByBit affiliated, so if you go onto the ByBit application on the desktop, you can actually go straight to the 𝗖𝗵𝗲 Pro application from ByBit, as they are their official partner. As you can see, I'm on ByBit now, and if you click on Web3 and then click on DEX, it will automatically route you to the 𝗖𝗵𝗲 website. So this allows you to access 𝗖𝗵𝗲 straight from ByBit if you wish. So now you know a bit more about the 𝗖𝗵𝗲 platform itself. I want to run you through how to open a trade on the platform, and then I'll show you how to earn rewards for trading on the platform. So let's take a pair like DOGE, for example. You can click in the top left to choose your trading pair. Let's say I want to open a long on Dogecoin. Then what I would do is I would go over to this section on the right here, and the first thing I would do is choose my leverage. So you have a variety of leverage options from 1 to 15x. Depending on the pair, will impact your leverage. The maximum leverage on a pair like Doge is 15x. If we go to Bitcoin, you'll get a higher leverage ratio like 30x. I mean, it's pretty rare you're going to have to use up to 30x leverage, but the option is there if you would like to. So for Doge, let's say I want to open an order on 5x. We can also go 7x, however much you want. You click confirm to set your leverage ratio, and then of course you need to choose whether to set a limit or a market order. If you set a market order, this will execute the transaction straight away. So if I choose to put, let's say 25% of my capital into a Doge long, I can click 25% here, or I can enter the amount of USD or Doge that I would like to purchase. Then I would click buy long with a TP and stop loss. I can set my take profit and stop loss in dollar terms, so I can set the dollar amount that I want to take profit at, or I could set a percentage amount. So let's say if Doge pumps 100%, I want to take my profit, and it will show me the price, which is 10.56, where my take profit will trigger. Then similarly for the stop loss, I can choose in percentage terms. So if I want to get stopped out at minus 25%, which in this case would lose me $13, or if I want to have a more lenient stop loss, or I can simply set my US dollar value. So I'm going to do a 100% TP and a 50% stop loss for the example of this. Actually, I'll go 25 because it's more reasonable. 50% is quite a hefty stop loss. Then I'm going to click buy/long. What will happen is it will open up the order straight away if you've already got your MetaMask wallet connected. Now make sure you have USDC in your wallet. As I said, the exchange is available across a variety of networks. You'll need USDC on what network you choose. So for example, if I have USDC on Arbitrum 1, if you click on the deposit or withdraw button, this allows you to deposit funds directly from whatever chain you want from your MetaMask into the platform. And if you want to get money out of the platform, you simply click withdraw and it will withdraw it out of the platform straight back into your wallet. So here I can withdraw my $163 back out onto the Arbitrum network, and you can also choose any chain that you would like to withdraw it with. The benefit of it being built on StarkX is it allows you to withdraw across multiple chains and also pay relatively minimal gas. Obviously, gas will be less on these chains versus Ethereum, etc. So I actually deposited using the Arbitrum network. It's pretty cheap, Arbitrum, so that's probably where I'd pull it out. So that's pretty much as simple as it is in terms of depositing and withdrawing. Now we can see I have my Doge long open, but if I wanted to set a limit order, which is probably what I would do most of the time, because aping into a market order is a little bit risky, then what I could do is say, okay, look, Doge is at 881. I think there's going to be a pullback to the 0.0867 level, so I put in 0.0867. Then I want to put in $100 order value worth of Doge, which will be 1,153 Doge. That's basically just over half of my total portfolio. Then I would like to go long with a stop loss of 25% and a take profit of 50%, or, I could even set it in USD value. So, when Doge hits 0.09, I want to take some profit. And if Doge hits, let's say, under this previous wick here, 0.0853, I would want to take my profit, I would want to get stopped out there for minus 8.07%. So then I can buy long, and on the active orders here, we can see all the orders that I've currently placed. So I've got an order here for Doge, and I also have a Doge long that I ordered on the market. I'm not saying ape into Doge, by the way. I'm just giving you an example of how to trade on the platform. That's basically how it works across a variety of trading pairs. So there's very little friction. Like, it's extremely easy, as you just saw, to open a trade, set your stop loss, set your TP, relatively decent liquidity. If you're a massive whale, like trading millions of dollars, obviously, a centralized exchange is going to have more liquidity. But for the majority of you, there should be enough liquidity on this exchange, especially on some of the bigger pairs like Bitcoin, ETH, to do your typical trading. Like we can see here on Bitcoin, we have multiple Bitcoin, 2, 5, 7, 10 Bitcoin, piled up at the 30.3 level on the sell side, and then we have orders for 1, 5, 9, 10 Bitcoin as well on the buy side. So it is an order book, so liquidity is native on chain. So if you're doing a lot of trading, and you're putting in orders and you've got positions, that means you are actually earning rewards. So Apex is structured so the more you trade, the more rewards you earn. So if you trade over time and you use the platform, you can actually start to stake those rewards to earn more yield, and I'll show you how it's done. So in the top, if you see the T2E bar here, which means trade to earn, you can click on that, and based on your trading, you can earn rewards. So let's say, I trade for a few days and I earn 2,000 banner. This isn't a lot, by the way. If you trade much more, you will earn much more. You can click claim, and this will add it to your wallet with these banner rewards that you earn. Now remember, banner is the rewards token of the platform. They actually have a massive $10 million scheme over a 1-year period of rewards giveaways. You can then go into the swap and manage liquidity tab, which will allow you to create LP tokens to earn yield. So if you click on manage liquidity, you can add banner together with USDC. Then you will receive LP tokens, which you can then stake in the pool to earn a reward. They have a banner buyback and burn mechanism, which means 50% of Apex Pro transaction fees will be channeled towards the buy and burn pool, which will regularly proceed with banner buybacks, which are executed via a time-weighted AMM swap. You have a choice of swapping your banner for USDC, so you can just earn rewards and then get more stables back to trade with or put back into your wallet, or you can save your banner until the end of the trade to earn event, which is after 52 epochs, so 1 year, and then exchange them for Apex, which is the governance token of the Apex Pro exchange, according to the redeem rate at the end of that period. That will increase as more banner is burnt within the BPP in accordance with the mechanism that I had previously discussed. You have a couple options there. You can hold onto your banner and then redeem it at the end of the 52 epochs to make even more, or you can sell it straight away for USDC if you just want to earn money straight away. But whatever you do choose to do, if you choose to pool it, hold it, or end up redeeming it for USDC, you will earn money for trading. So the more that you trade, the more that you earn. So if you're a pretty active trader and you use DEXs a lot and you want somewhere where you can actually be rewarded for the more you trade, then you can definitely earn some decent rewards here on Apex. And as I said, the reward ratio is quite good, with $10 million being given away over the total period of epochs. So it definitely is quite a juicy amount of rewards. Now, the other thing you can do is stake the Apex token. So I'm not necessarily saying to ape into the Apex token. This is totally your choice based on whether you want exposure to the upside of the Apex exchange specifically, but the token itself acts as governance, allowing token holders to submit on governance proposals. It also gives users the option to earn Apex through participation rewards and liquidity mining, and of course, you can also stake your Apex to earn more rewards in Apex, which probably right now is the biggest use case, in my opinion, for the Apex token. There's a maximum supply of 1 billion tokens. 23% is allocated to the core team and early investors with a 1-year cliff. The remaining 77% goes to the Apex DAO and will be used for participation rewards to incentivize people to use the platform, ecosystem building, and liquidity bootstrapping. So if you go onto the staking section of the website, you can see that you can currently earn 20% for staking your Apex. So if you earn banner rewards, you could theoretically swap them to Apex and stake that Apex, or if you hold onto your banner, at the end of the period, you will be able to redeem that banner for Apex, and then you could stake it then. So that's one way you can actually earn Apex tokens, simply by just trading on the exchange and holding on to your banner. So if you stake Apex, you can earn 20%. It's very simple. You click the stake button, you enter your Apex, and it's as simple as that. You can also stake escrow Apex tokens as well for a similar ratio. So if you are an Apex token holder, you can stake in this pool. Once you stake Apex and ES Apex, you can earn USDC rewards. And of course, with those rewards, you can compound them back into the pool to make more. You could pair them with Banner and put them in the liquidity pool, or you could just use them to trade on the platform as usual, as trades are denominated in USDC on the Apex exchange. So that's just a couple things you can do with it. So there's a bit of a flywheel here. If you're bullish on the protocol, you have to make your mind up as to what you want to do with your own rewards. I'm just giving you the option of doing so. And remember, if you do want to trade on Apex, there is a link in the description in order to trade on the Apex exchange. If you sign up, it's as simple as using your MetaMask wallet, and then you can deposit funds onto the platform. I just want to do a quick roundup of what's happened on Apex over Q1, because a lot has actually happened. They've distributed over 160,000 USDC. They have distributed 10,000 𝗲𝗊 tokens, 2,100 𝗔𝗍𝗄𝗃, which is their airdrop token, and they've had multiple upgrades to the platform. So they've had a BBP upgrade to allocate funds and resources to the staking program. They've also upgraded their affiliate program. So if you're a creator and you want to earn yield through affiliates, you can actually earn 𝗔𝗍𝗄𝗃 and 𝗔𝗍𝗄𝗃 for supporting the platform. Or even if you're just retail and you're not a creator and you find a way to get people to sign up using your link, you can earn money through the affiliate program. There's also revenue sharing, which was just unveiled for the staking program, which allows apexes to stake their 𝗔𝗍𝗄𝗃 and 𝗔𝗍𝗄𝗃 for rewards. As we explained before, they updated the referral program. They had 14 new perp contracts. So we started just with Bitcoin. Now we have 14 contracts, which is very impressive, and it shows their tendency to keep introducing new pairs, which is a really cool function, because eventually, we want it to be an exchange where we can essentially act as a one-stop shop for trading with every pair, kind of like a centralized exchange. So I think we're on the path to getting there eventually. Of course, they have to keep in mind that they need sufficient liquidity, so it makes sense not to rush with those pairs. I think right now you've got pretty much everything you could want from like a major cap perspective, Bitcoin, ETH. It might be good to get some of the L1s, but I'm sure, they're going to come with time. And we also had updates on the tokenomics and the trade to earn. So I'm going to leave a link to the 𝗔𝗍𝗄𝗃 light paper and the 𝗔𝗍𝗄𝗃 Pro blog in the description if you want to check out any more specifics about the platform, if you're interested. Of course, I want to thank 𝗔𝗍𝗄𝗃 for being a partner of my show. They are one of our primary DEX sponsors on the channel, so I want to thank 𝗔𝗍𝗄𝗃 for their support as well. And I just think it's a great platform to use. So if you do want to use the platform, of course, there's a link in the description. I'll leave all the necessary resources in the description as well. And of course, I'll probably be trading on the 𝗔𝗍𝗄𝗃 platform during my daily live stream. So I hope you have a nice day and hope you learned something about the platform. If you've given the platform a go, let me know what you think in the comments below. I'd love to hear your feedback. And if you want any improvements or changes or anything, let me know as well, because I'm sure we can get in touch with the team and make them happen. They're pretty dedicated to making this platform the best experience possible for the users. So yeah, if you use the platform, let me know what you think. And until the next one, I will see you next week. Peace out.